Hello, in this presentation we will enter transactions related to the creation of an invoice into our bookkeeping problem within Excel, keeping in mind what that same transaction, the creation of an invoice, might look like in software such as QuickBooks. We're going to start off looking at what it would look like to input into software like QuickBooks, input an invoice for something like selling inventory, such as, in our case, a guitar, and then we'll jump over to Excel and see how that would be entered into our bookkeeping system within Excel. If you would like more information about the QuickBooks Pro, take a look at our comprehensive course in the link below. If we were to input this into something like QuickBooks, we would in essence just select the create invoice when we were trying to create an invoice for the creation or the completion of work. In this case, we are actually selling something. An invoice could be used if we were having a service company, if we did a service like bookkeeping services and we were billing the client, or if there's some kind of inventory. The difference between an invoice or what an invoice means, however, is that we have not yet received payment, typically. An invoice will mean we haven't got payment, meaning it's been shipped out, the work has been done, we earned the revenue, have not yet gotten the money, and expect to receive money in the future. If we enter an invoice into something like accounting software, it's typically going to have an input screen, something like this, and it'll be pretty easy to input the input screen if things have been set up the way they should be set up. And all we have to do is open up the invoice and put in the customer, in this case Anderson Guitars is who is purchasing, and then we're going to put in the date. The invoice number will typically auto-populate, and then we just need to choose the item that we are selling, in this case a guitar with this number. This is the item number of the guitar. We're selling one of those. Once we choose that, the rest will populate. The QuickBooks system, if this item has been set up correctly, will just draw out the fact that this is a Stanberger solid body guitar. The rate that we sell them for is $410. And the amount then is 410, which is 410 times 1. We do have sales tax on it at 5%, and the 410 times that 5% would be the $20.50, and that would give us the total then of the 410 plus the $20.50 sales tax that we expect to receive from the customer. That would all be done automatically. All we would have to know when inputting this information is who's the customer and what's the guitar number. The rest would then auto-populate. QuickBooks, however, is doing a lot more than just that when recording this journal entry. The person that puts this information into the system doesn't need to know much more than that. When we put this into Excel, however, we will need to know a little bit more than this in order to put this into the system in the format of a journal entry. So let's interpret this first. First we can say, well, the invoice itself means that we're dealing with accounts receivable. We're dealing with people owing us money, accounts receivable. People owe us money for work that has been completed, the work in this case being the giving of the guitar. And we have not yet received cash and therefore expect to receive money in the bank. Invoice often being something that we would mail out and receive payment at some future time. So we can imagine mailing it out with the guitar at this point. Then we know that the other side would be the sales side. Sales is increasing by $410. That's our sales price. So the receivable is increasing and sales is increasing. The receivables, however, are not increasing by the sales amount of 410, but by the sales amount plus what is owed to us for the sales tax, or 430. That $20 difference then is going to actually have to be going to a payable account because we owe it in the future. So we're going to have to include that in a payable account to the tax board that we owe, probably the state tax. And then there's going to be a separate part of this, and that's going to be the fact that we have to decrease our inventory and we have to record the related cost of goods sold. That information not on the invoice. However, it is in QuickBooks if the invoice or the items have been set up correctly, and therefore we're going to have to put that same information in when we process this in the Excel format. So we're going to say that the cost is, in this case, $328, and we sold it for $410. and 10, and therefore we're going to have to record a decrease in the inventory of 328, and the other side, cost of goods sold of 328. All that would be automated. We're going to see how that process would work in Excel as we enter the journal entries related to this. So if we were going to do this same transaction with journal entries related to an invoice in Excel, that's what we'll do now. Here is our Excel worksheet so far. We've been entering data prior to this. The data has been hidden that we've entered journal entries in, so note we're starting on column F so that we can just limit the space we'll be working with. But that information is still populated over here in the general ledger and the creation of the trial balance. We're going to start here with the journal entry for this invoice that we are creating. The date of the invoice in cell F5 is 1/12. So 1/12, date of the invoice. So we are invoicing, remember, for work that was done, meaning we gave a guitar and we are earning revenue and have not yet received cash. That typically, first question I would ask, is cash affected? We're going to say no, we did the work, we gave the guitar, we're basically shipping the invoice out with it, and therefore cash is not affected. What is affected? Accounts receivable. We're getting a receivable and therefore need to put the receivable on the books. So we are owed money. The receivable is a debit balance account. We need to make it go up. So we're going to do the same thing to it, which in this case is another debit. So we will copy the receivable in AJ6, right-clicking and copying. Going to put that into G5, right-clicking and pasting 1, 2, 3. The amount then will be, we can do a quick calculation on this. We'll do it with the calculator first. We sell it for $410, but we're also going to have to collect on that the sales tax. So 410 times 0.05 for the sales tax would be $20.05 plus the 410 original amount. That'll give us $430. When we enter this into the Excel format, we're going to remove the pennies. We're going to round it just to make it look a little cleaner. So just be aware of that. If that's bothersome, note that rounding is going to be a problem no matter what. Even if we round 2 pennies, we'll have fractions that won't round out. So we're going to round to the whole dollars here, which would be 431. And then we can also calculate that, however, by saying if we have 410 times, we're going to get 100% of that plus another 5%, or 1.05, 105% if we move the decimal over 2 places. And we can say that is the same, 430. We'll do that same thing one more time in Excel. We're going to put our cursor here in H5 equals 410 times 1.05, 105% equals 431, or 430.50 cents. Note that we actually show the calculation here. So even though we can't see the decimals, if I go up to the Home tab and show the decimals, we know that, and I'm in the Home tab, Numbers group, and I'm just observing the fact that there are decimals there. We can make this a little bit larger, and just in case we had a bigger number there. So there we go. So I'm gonna go ahead and remove the decimals, however. Just note that if I multiply or do anything with this exact cell, Excel actually sees it as $430.50, even though it shows 431. So keep that in mind when you do calculations within Excel. So that's going to be the first starting point. Now, typically when we debit accounts receivable, we then credit what we have earned, or revenue. Revenue is typically the credit. We have 3 revenue accounts, and notice it's in order. We have the assets, liabilities, equity, and then revenue. Revenue down here, we have merchandising revenue, or merchandising sales. That's our sales revenue account for selling our guitars. We have rent on music equipment, other type of revenue account, and service revenue for us when we're going to fix guitars and have guitar lessons, which is going to be exciting. But here we have a sale for the actual guitar, our first sale, so it's an exciting moment. And we're going to credit that amount. We already know we're going to credit it because we debited the receivable. If we think about it, we think that revenue is a credit balance account. It only goes up, meaning the customers don't pay us. We don't pay the customers. The customers only pay us, and therefore it only goes up. Now, you might be saying, well, there's going to be a problem. There might be issues that happen. When they do happen, there might be a return or something. we typically make another account called an allowance or returns, or if there's other problems, it's typically an expense bringing down net income. But the revenue account generally only goes up, and it does so in the credit direction. So we're going to copy this account in AJ23, right-clicking and copy. Scrolling up and put that in G6, right-click and paste 1, 2, 3. We are not going to credit for the 431, but for the sales price, which was only the 410. So the guitar actually costs, we're going to put a credit with a negative $410. And if we select equals, it'll put the brackets there. We can go ahead and indent this, home tab, alignment, and indent, or you can just hit the space bar 3 times, or you don't have to indent if you don't want to. And then we have the last piece. We're going to be off by the difference here, which is of course that $20.50, meaning this minus this, if I highlight those cells, will be calculated for us at the 21 here, rounded. And so we can then put that here. And of course, that is the calculation for the sales tax, which is the 410 times 5% or 0.05. So I'm going to go ahead and put that here. I'm going to use our plug formula, which is the negative SUM. I'm going to sum up with a negative, meaning I want to sum these, this whole, that, and that, from H5 colon I6, and then flip the sign. So we could just put in a negative 21 there if you want, or we can use that formula. I think that formula is useful. If we highlight the entire thing, then we're now at 0. We just need to know now what that account will be. We know that that 21 is sales tax that we collected, we're going to collect, that we now owe, and therefore we have a liability, something we owe in the future. We don't get to keep that money, and we owe the sales tax payable. Here's the account. We already know that we're going to credit it because that's what we need. And if we think about it, however, sales tax payable is a credit balance account as a liability, normal balance. It needs to go up. The bad thing's going up. We owe more money to the state, and therefore we're going to do the same thing to it as its normal balance or another credit. So we will copy this, scrolling back up, and put that in G7. Paste it 1, 2, 3. That's going to be our journal entry. I'm going to go to the Home tab. We're going to go to the alignment, increase the indent one more time. This is our journal entry. However, it's only half of our journal entry because the other half will be the decrease in inventory and the cost of goods sold. I'm going to post this first and think about this separately. I do want to point out, however, that when we do this manually in a system like this, it makes good sense for us to break this out into 2 separate components, recording it in 2 separate typed transactions as if it were 2 separate transactions. However, it's not really 2 separate transactions. And if you're working in a computer system, you'd have to know that these transactions will most likely be combined because they happened at the same point in time and in essence are the same transaction, and the debits would be on top. So we'd have to be able to recognize that transaction in a computer system. So it's important to note that if we're making a complex transaction outside of a computer system and we want to make it in such a way that we can go back and look at it and figure it out, that's why we're breaking this out into 2 components, and we might break the rule of having debits on top and the credits on the bottom. If we're looking at a computer system which is driven by rules, meaning this happened at the same time and is in essence the same transactions and the debits always go on top, credits always go on bottom, then it's going to look a little bit different, might be a little bit different for us or more difficult for us to read. So keep that in mind as we do things outside, when we do things outside, when we do things in a computer system, why we're doing things in those different formats and how we can do so to get the best results. So let's go ahead and post this first. We're going to say here's the accounts receivable. We're going to post that to the accounts receivable account, which is the second account on the trial balance and therefore the second account on the general ledger. I'm going to go ahead and freeze the panes first. So we'll put our cursor in AJ1. We're going to go to the View tab up top. We're going to go to the Windows group and select the Freeze Panes item and select the first item, which is Freeze Panes. Then we'll scroll over to the Accounts Receivable, and here it is. We're going to be on the second area in AQ9, and we want to point to that item. So we're just going to select equals and then point to this 431. Once we select enter, it will increase the receivable from 20,500 to 20,931. We're then going to do the posting for the merchandise sales. Here it is there. It's down here, way down here on the trial balance. Notice it's in order: assets, liabilities, equity, then income and expense accounts. It's our first income account, our first revenue account. Exciting moment in our problem. And it's going to be in the same order over here in the general ledger. So we're going to go to the right, just scrolling over with the right arrow to the right of the worksheet, finding the revenue account. It's going to be down here. There it is, merchandise revenue. We are always in the credit side. We're in cell currently BH22. This is cell BH22. Cannot quite see what we want up there. Gonna go over to the bottom here and make this it's at 120 right now, percent. Gonna zoom it down just a tad and see if we can zoom it down so that we can see these two things in one window. There it is. So we are in BH22. I'm going to say equals and point up to this cell in I6 and then enter. I'm going to go back over here and make this a bit larger again, back up to 120. If that was difficult to see, and if you have everything formatted exactly the way we do in the same cells, you can just type in equals I6 and that'll put that formula in there. We, of course, will see that 410 on the trial balance. I'm scrolling back to the left over here, back to the left. And there it is right there. There's the 410. Now we're going to post the sales tax payable. There's the sales tax payable. Here it is on the trial balance. We're going to go ahead and find that on the general ledger. Should be in the same order. So we're going to scroll over. There's the orange accounts or the liability accounts. Scrolling down to what looks like the sales tax payable in the credit column. So we are in the credit column. And once again, we can't quite see what we want there. So I'm going to go and make it from 120 down to 110. And let's make it a little bit. So now we're down to 100. So I'm going to put my cursor in BD25. I'm in BD25 equals, and then to point to cell I7 and enter. I'm going to go back up to 120%. And once again, if that's difficult to see, we're in BD25. If I delete that, you could just type in equals I7 and enter. There's the 21. If we scroll back over, I'm using the left arrow, scrolling back over, and then going to this item, there's the 21 there. We should be back in balance, meaning the debits minus the credits equal 0. And we now have net income. We have income, meaning the credits of the revenue accounts are greater than the debits of the expenses, which we have none yet. And therefore, we have revenue of 410. That's a credit. Doesn't mean a loss in this case, in the case of our trial balance. That's the first part of our transaction. Now we're going to record the second part, the part not seen on an invoice, the part of decreasing the inventory and recording the cost or the expense related to it. We didn't really earn 410, or we did earn it, but our net income isn't 410. It will be less than that because we had to give up something. We had to give up an asset. We had to expend an asset, consume an asset, which was the guitar we sold. So we're going to reduce the receivable then. I'm going to do this in a separate journal entry, even though it's really part of the same transaction because it's easier to see that way. And therefore, we're going to go to the inventory. This needs to go down. We see here that we have a debit balance account and we need to do the opposite thing to it. So we're going to credit it. So I'm going to copy this. I'm going to skip a line and I'm going to put it on the bottom here. So I'm skipping a line to have a new journal entry. And then I'm going to put it on, there's the top of the journal entry. I'm going to put it on the bottom. So I'm over here in G10, right click, paste 1, 2, 3. Then I'm over here in I10 and we're going to put the amount, which was 328. It's going to be a credit, negative 328. Then we're going to debit something for 328. There's the debit to 328. We can indent this, go into the Home tab, go into the Alignment and Increase Indent. Then we just need this amount here. That's going to be the cost of goods sold. That's the expense of us using the inventory in order to help generate revenue. Most important expense for merchandisers called cost of goods sold. We already know that we're going to debit it because we credited the inventory. However, if we think about it, we know that it's an expense account. All expense accounts go up in the debit direction and they typically don't go down. Therefore, we're going to do the same thing to it and debit the expense account. So we will copy that, scrolling back up and put that in cell G9, right click, paste, 1, 2, 3. Let's post this now. We got the cost of goods sold right under all the revenue accounts. So it's way down here. It's going to be in the same order: assets, liability, equity, income, and then expenses. This is a type of expense. So we're going to scroll way over here. We're using the right arrow once again, scrolling over, scrolling down. There's the cost of goods sold right there. It's going to be on the debit side. I'm in BK22, BK22. And we will say that that equals, and then point all the way over here to that 328. Once we select enter, it should populate to the 328. So BK22 equals H9. Scrolling back over, I'm scrolling all the way back over to the trial balance. We see we're out of balance by the 328. And we see that that 328 is here and our net income went down. Meaning net income is the sales price, 410, minus the cost of the inventory we sold. Notice we can calculate that all nicely right here just on this little trial balance and see it all in this one little component rather than having a balance sheet and an income statement and a statement of equity. We can see it all right there if we understand the debits and credits. Now we're going to post the inventory side. Here's inventory, third account on the trial balance, third account on the general ledger. Scrolling over, scrolling down. Here's inventory, and we need a credit to inventory. So we are going to be on the right. So we're in AR 25, and we're trying to pick up that 328 equals that 328 will bring inventory down. So inventory went from here down by 328 to 2,569. If we scroll back over, we see that 2,569, and we are back in balance. Now that's going to be the first transaction, or the full transaction for the recording of that inventory. We want to do a few other things, however. First, we have a receivable. That receivable is recorded here, and we can see that people owe us $20,931. If I want to know more, however, including who owes us that money so we can try to collect on it, we can't go to the normal detailed account, the general ledger, and get that information. This only gives us the information by order of when it happened. We want to know who owes us the money, and therefore we're going to have to scroll all the way over to the subsidiary ledger, which will in essence put the same information in order by who owes us money by customer. So we're going to scroll to the right. We're going all the way to the right. All the way to the right, I'm just going to go to the subsidiary ledger we started in a prior presentation, and here it is. It's way over here in column CR, and we're going to say that Anderson is the one that is purchasing this guitar. So Anderson already owes us $5,000. Now we're in essence just going to increase that same amount. So I'm going to say equals and just post the same amount as we did to the general ledger here to the subsidiary ledger. And then it shows that Anderson now owes us $5,431. The total of all the receivables from all the customers is this, $20,931. And if we scroll back over then to the general ledger, we should see that same amount. So I'm scrolling all the way back over to the general ledger, and we're going to the accounts receivable account. $20,931 should be there. And we're going to go back over here. There's the $20,931 there. Then we have that information has been set up in terms of the receivable. We also note that we sold inventory. So we have inventory here, and we need to track the fact that we sold that inventory. So if we go back to our worksheet for inventory, note we have inventory on our trial balance there. But we need to know which inventory it is and say how many guitars we have and what's the value of those guitars. So if we scroll back over, we're going to scroll back over, way over to our worksheets again. And we're scrolling back over to our worksheets. We've got our inventory worksheet, which looks like this. We have the inventory types here, and we're going to scroll down. We sold a GTP something type guitar, so that's going to be this item. This is the one we sold. We had one that was currently available to sell, and we then sold it. So we're going to go into the cost of goods sold section. So we are in J43, and we're going to say we sold one of those, and the sales price is just going to be that 328. And then if we multiply that out, we've got 1 times 328. That's the cost of goods sold that we figured out that we actually already put on our journal entry. This is how we could kind of work it up and back up that journal entry. And then how many units of those do we have left? 1 minus 1. I'm just going to say this is what we had. This is going to be on ending inventory now. So this is the cost of goods sold. This is what we recorded in cost of goods sold. We can see it here. And then we're going to record what's left in ending inventory. We have 0 now. We had 1 and we sold it at 328. You could just type in the 328. I'm using formulas. If we multiply this out, 0 times 328 means, of course, we have nothing left as of this date. So now we got to go down to this total down here. Notice what the total is doing. There's no best way to do this unless we use kind of a complex formula. If we double click on what this is calculating, we see that it's calculating the ending inventory on all these units here. So it's calculating the last unit. So here we have 1 unit at 400. We have 1 unit at 480. We have 1 unit at 440. And here we're picking up the 1 unit, and now we need to bring that cell down. So we're going to fix this formula as we go through this worksheet. We need to bring that cell down. This cell is CP 42, and we need it to be CP 43. So I want to bring that here. If I look at the formula, here's CP 42. I'd like to just bring that to CP 43. And there we have it. It has been adjusted. So we're going to go down, and so if I double click on that, it looks like it's picking up the correct numbers. If that's confusing, we could just go ahead and redo this formula as well. We could delete the whole thing and just say this equals, and I'm going to scroll up to the top of this item and just point to the items we want. I want that one plus, we want that one plus, we want this one plus, we want the last number in the column. So we want this one plus this one plus this one plus, that's the last one, delete that last plus, and there we have it. So we get the 2,568. That should match what now is on the trial balance. So I'm going to scroll all the way back over to the trial balance, holding down the left arrow, scrolling up to the top, and 2,569. It's a rounding error. So there's our amount in terms of guitars. It's off by $1 because of rounding. It's backed up by our subsidiary ledger. Now we can see what this looks like on the financial statements. We have our ending trial balance. If we were to tie this to the financials, we'd say that's going to the financials. We worked on that. We worked on the receivable. We worked on the inventory. That's going to go to the financials and cost of goods sold. This would all be automated within an accounting system. If we scroll over to our financials, it's being generated from this information. There's going to be the accounts receivable. There's the assets. It's totaling up in our current assets. It's part of our total assets. And if we scroll over here, there's our owner's equity. And scrolling down, we now have income of 410. But we also have cost of goods sold of 328, giving us the gross profit of 82. No other expenses. Gross profit then at 82. And our equity down here is going to be totaled at 154.79, which is the beginning balance plus what was input by the owner investment, then our net income being drawn from here. And that gives us our total change, and that gives us our ending balance in equity, that 154.79 being populated here, 150 as well. So that's going to be how this can be transaction. Notice that we put the journal entry in, and then we posted it all through this process. That can be automated by the accounting system. But if we understand what is going on, then we can go in and troubleshoot the problems within it. We will make the actual financial statements at a later time.